Okay, guys, we're going to get started. Welcome, welcome, welcome to our weekly webinar, Lunch and Learn. We encourage everybody who is on this webinar or who is maybe listening to the webinar later on through our YouTube channel to please register for the upcoming webinars. If there is a topic that interests you and you are not able to make the live webinar, if you have registered, we will forward you the YouTube videos so you can watch it at your convenience. So we encourage you to please register for future webinars or subscribe to our YouTube channel, and you'll be alerted when there's a new video that's uploaded, and that way you can just access many of our videos through the YouTube channel. Okay, today we're going to talk about foreign national loans, and we're going to also talk about what is a foreign national, because a lot of people have an idea that may or may not be what lenders view as a foreign national. So let's just start with what is a foreign national. So typically a foreign national person is somebody who does not have permanent residency in the US. They're not a permanent resident alien, and they're not a citizen. It's really kind of that simple. But from a lending perspective, there are many foreign nationals that are treated the same as citizens or permanent resident aliens. And a lot of people don't realize that. They immediately think, okay, this person doesn't have permanent residency here, so they can't get a loan. That's not necessarily true. So that's actually a really big misconception. There's a lot of ways a foreign national that is living here now, let's say, could possibly get a conventional loan, and people don't realize that. So let's just talk about it. Let's talk about the different types of loans and who can get what, and how does it all work. First of all, if you are a foreign national and you are in the US on a visa, okay, if you are here on a visa, there's probably about 40 or 50 different visa types. But out of all of those different visa types, there's a very good percentage of the people that are here on visas that are eligible for a normal conventional Fannie Mae or FHA loan. A lot of people don't realize that. So let's just take this one step at a time. Let's say somebody's here on a O1 visa for a specific kind of work, like it's a unique job that only they can do, or they have a certain skill set that they're here for an O1 visa. That's a very common visa. Or if they're here on a religious visa, which they could be associated with a church, or there's many different visa types. But these are people who are not permanent resident aliens. They're not citizens, but they're here on a visa. If they are here on a visa, depending on the visa type, and we can document a 2-year history in their line of work that doesn't have to be in the US. For example, if somebody has 6 months on the job in the US, and we can document that, let's just say that they're a doctor and they were a doctor in another country, we can document the proof that they have at least 2 years in the same line of work. Even if that was in another country, they could potentially still qualify for a conventional loan, depending upon what credit they've established in the US. So just because somebody is a foreign national does not necessarily mean that they can't get a conventional or FHA loan. There's a lot of people that don't understand that. Now, there are a lot of other loans we're going to discuss, but I wanted to just kind of discuss this first, just because we always try to see if we can fit somebody in the best possible loan for them, the lowest down payment, the lowest interest rate, and all of that. And we start with that. If they have a visa, they may qualify. Now, not every visa type qualifies, but we are the experts that have the list to be able to say to you, this could work, that could work, or whatever the case may be. Now, let's talk about if somebody doesn't have a visa. If they don't have a visa to be here or be living here, let's say, they may have a tourist visa, which is different, and that would not be accepted for a conventional or an FHA loan. But if they just have a tourist visa, or they're coming from a country that we don't require a tourist visa, like London or Canada or one of those countries, then they're truly a foreign national. Then there are different types of financing that is available for them. Okay, so let's just talk about that. So very similar to when somebody is a citizen, what we're going to look at is, can we do this as can we do this as a fully documented income loan? Or do we need to do this as a no income verification loan? They really have both options, even as a foreign national. So if somebody is not here on a visa, they don't have a social, they're a true foreign national, okay? They are living in another country and just coming back and forth and visiting, then we're going to look at the scenario and say, can we document their income from the other country, which would be either the way that banks document foreign income is if they're self-employed, we need a letter from a CPA with specific information on the CPA from or the accountant in that country. Or if they work for a company that is in that country, then we need a letter from their employer and some pay stubs. So they're not asking for tax returns from the country that they're in. They're asking for other documentation like an accountant letter if they're self-employed, or paychecks and a letter from their employer. So there is such a thing as a fully documented income foreign national loan. Those loans are typically going to be the lowest interest rates. The interest rates on those, depending upon if it's an adjustable rate mortgage that is fixed for maybe 3 years or 5 years or 7 years, or if it's a 30-year fixed, the interest rate on those loans run anywhere from the low 7s to the mid 8s. So they're actually pretty comparable to conventional rates. They're not too far off from conventional interest rates. And those loans typically have an option of a no prepayment penalty if we document income. They also have there's also a lower down payment. There may be a lower down payment. Now, we will evaluate the file and see if that's a possibility for the borrower. There are additional requirements such as we've got to look at the exchange rate and do conversions to see exactly what they qualify for. But if they're buying an investment property, which they would most likely be buying an investment property if they're a foreign national, since they can't live in the US or be here for a long period of time, we could use the potential rental income on the property, whatever the future rental income is, to give them more income. So in the situation where we can document income on a foreign national, the rate is going to be the best, the down payment is going to be the least, and there's going to be no prepayment penalty. And that is really like a best case scenario for a foreign national loan. Now, in the event that we can't document income, or the borrower says that he or she doesn't even want to try to document income, we can go, pardon me, straight to a no income verification loan. There are two options with the no income verification loan. There is an investor cash flow loan, which is also commonly known as a DSCR loan, or the debt service coverage ratio loan. Or there is a no ratio loan or no income verification loan, which is not dependent upon the rental income of the property. So on a no income verification for national loan, the best case scenario is if somebody is able to document that the rent, if we are able to document the rental income covers the mortgage payment by a 1-to-1 ratio. Now you can use short-term rental income for that also as well. In that scenario, a borrower may be able to put down as low as 25%. But oftentimes in Florida, because of taxes and insurance, sometimes those ratios don't work out. So what has to happen in that scenario is, pardon me, a larger down payment may be required. Now, if the rental income is, or the prospective rental income, excuse me one second. Pardon me. Let me just grab a water. So if the prospective rental income does not cover, even if we're using short-term rental income and somehow it doesn't cover the mortgage payment by at least 0.75%, meaning that the mortgage payment is, let's say the mortgage payment is $5,000, but the potential rental income is less than $3,750. Okay. It doesn't cover it. There's a big deficit. There is what's called a no ratio loan, where it's completely not looking at the income at all. And those down payments are 35%. The important thing to know on a no income verification foreign national loan is the more we can document regarding the rental income or the higher prospective rental income, the lower the down payment and the lower the interest rate. So the interest rates on the no income verification foreign national loan can run anywhere from the high 8s into the mid 10s, depending upon the scenario and how little documentation that the borrower wants to give. On the no income verification for national loans, there is typically a prepayment penalty. It can be bought out or bought down, but it starts with a 3-year prepayment penalty. This is another reason why we always try to do a full income verification loan if we can, just to avoid the prepayment penalty situation. But the borrower does have a choice to buy it down to a 1-year prepayment penalty. There is an additional point generally involved in doing that that's charged by the lender, not us. As a reminder, we're licensed with about 35 or 40 different lenders. So we have an idea who is going to be the most competitive for a particular loan. Now, the prepayment penalties, we are suggesting for people to not do longer than a 1-year prepayment penalty, just because we feel interest rates are coming down very dramatically by this time next year. So that is our discussion with the client, that it does not make sense to be stuck into a long-term higher interest rate, and it's better to do a 1-year prepayment penalty. So just to kind of recap what we just talked about, foreign national loans can fit many different buckets. They might possibly qualify for a conventional or an FHA loan, depending on what they have as far as a visa, or with FHA, they actually need an employment authorization card or an EAD. And with the different visa types, they may or may not be allowed to do conventional. But the true foreign nationals have options as well. Pardon me. Okay, let's talk about an ITIN loan and what an ITIN loan is. Excuse me for 1 second. I'm so sorry that I'm coughing. Pardon me. So an ITIN loan is when somebody is given an individual tax identification number. It's not necessarily their social security number, but it's basically like a temporary social security number, temporary situation that the government gives the borrower. We do have ITIN programs, and they're kind of a hybrid of the products that we were just talking about. They also have an option of no income verification and income verification, but we do have an option for somebody who has an ITIN number. And a lot of those options are very similar to what we just discussed. And we can go over that with the client. The important thing to know is that if somebody has an ITIN number, they have maybe a little bit more options than a true foreign national, just because they could be buying a primary residence here as opposed to an investment property. Okay, let's talk a little bit about DACA. So for those who don't know what DACA is, those are the dreamers, the people who their parents came here illegally, but then they were born here in the US. I'm sorry, that they were brought to the US when they were kids, not born in the US. We do have programs for DACA. It's actually through FHA. And they are allowed to get an FHA loan. Now, they do have to have an EAD card, which sometimes is not the easiest to find, but they do have to have an employment authorization card that they're able to work. So it's kind of like FHA is saying that, yes, you can do DACA loans, but a lot of people sometimes don't have those cards. So it's a hit or miss with that situation, but we can also look at that and see and tell you what we can do with that. So there are certain companies, certain countries that are restricted. There is a OFAC list that we have to refer to when we're looking at foreign national loans. For example, we can't do a loan for somebody coming from Russia, or we can't do a loan for somebody coming from that has an Iranian passport. You know, there are certain countries that are very obvious that we can't do loans for. And then there are some countries that we have some lenders who are willing to do it and some who are not. For example, we can do a loan for a Venezuelan foreign national at one lender that we have, and then all the other lenders that we're licensed with will not allow Venezuelan foreign nationals. So it just depends on the country and the borrower, and you want to make sure that you get with us and ask us if there's anything that can be done for that particular country. I do want to mention that we have a lot of loan officers that speak many different languages. In the event that somebody has somebody from different country, please reach out to us if you need somebody that speaks their native language, whether that's Spanish or Creole or whatever it is. We may be able to just, we should be able to match them with a loan officer that speaks what their language is, because we do have a lot of loan officers, very international group of loan officers. The other thing I wanted to mention to you is the timing for how everything works. Now, if somebody is doing a foreign national loan, it's a no income verification loan, typically we are able to get a loan closed within probably about 3 weeks from start to finish, but we always ask for 30 days just to be safe, because sometimes the money has to be moved from the international account into the US account. So I would say 30 days to be safe. But if somebody is looking to do a full doc foreign national loan, that's when it gets a little bit longer, only because we're having to get documents translated from their accountant or their employer overseas. It's a good idea that you get them pre-qualified by one of our staff, by one of our loan officers earlier than possible, just because we could be working on all of these letters and documentations that are required, the documentation that's required ahead of time, so that we're not sitting waiting around for an accountant in Romania to draft a letter, and you know, then we have to get it to a translator. So sometimes those type of loans can take a little bit longer, but we try to do the best we can to ask the client to get the documentation up front. Now, regardless of what type of loan it is, whether it's a foreign national no income verification or it's a foreign national income verification, the funds have to be in a US account for the down payment. And with most of the lenders, the reserve requirement also has to be in a US account. Let's talk a little bit about the reserve requirement. So the reserve requirement is only to show that after this person buys the house that they are not completely broke and destitute. So the depending on the program and the lender, it could be anywhere from 6 to 12 months of the mortgage payment. So that's principal, interest, taxes, insurance, association dues, whatever that figure is, times 6 or times 12 needs to be in a US account. Now, there's a little bit of flexibility with some lenders, like some lenders that require 12 months may allow 6 months to be in the account overseas and 6 months to be an account in the US. But for the most part, we generally need at least 6 months reserves plus their total funds for closing in a US account, preferably at least 30 days before closing. Excuse me. That way we have plenty of time to document it. We do need to document the source of where it came from, but it doesn't have to be seasoned. Like, in other words, let's say they moved money into their Romanian account and or their account in Brazil or wherever it was, and then they moved it to the US account. That's fine. However, we do have to get proof that the funds were in the account in whatever country it was in. And so they're going to want the bank statement from wherever it came from. What they're specifically looking at is that there wasn't a large deposit of cash that was put in the account. It doesn't matter if it was transferred from another account to this account. We can document all of that. What the banks are looking at is that there wasn't a cash deposit that was done. Now, sometimes that's a little bit difficult because with certain countries, it is much more prevalent to see cash deposits, but that's something to discuss with your loan officer, and the client will discuss it with the loan officer as well, so that we can understand exactly what is being documented and what we need to have documented. So one other thing I want to mention in reference to foreign national loans is that depending upon the property type, that will dictate the down payment. So very similar to with just a normal regular citizen, the down payments are different with different property types. So if a foreign national is buying a condo, you could probably guarantee that they would need about 30% down, but sometimes there might be an exception to 25% down. Versus if they're buying a house, probably 20% would be okay, but depending upon their income documentation, that could go all the way up to 35%. So there are many different factors that come into play when it comes to a down payment. We're looking at income plus property type. Example, a full doc income verification for a national loan buying a condo would need 30% down. A full doc for a national buyer buying a house would need 20% down. Now, if it's a no income verification borrower that's a foreign national that's buying a house, we might be able to do it 25% down, but depending upon whether or not we're doing it with a debt service coverage ratio that is 1-to-1 or not, that will determine the down payment and the rate. So let's just back up and revisit that for those who did not jump on the webinar from last week. Again, a debt service coverage ratio loan is when you have a certain amount of rental income, sorry about the cough, that is covering the mortgage. If it is covering it 1-to-1, rental income is $2,000, potential rental income is $2,000, potential future mortgage payments $2,000, 1-to-1 coverage. That's a best case scenario. That is going to be the lowest down payment and the best interest rates. The rental income is $1,000 and the mortgage payment is going to be $2,000. Now you're talking about it not covering it 100%, and that's going to be a higher down payment and a higher interest rate. So these are all things that we will walk you through with your clients to discuss and see what exactly where it'll fall. We'll ask you what you think the potential rental income is for the market. but it will ultimately come down to an appraiser that is going to ask these, that's going to give us a fair market rental analysis. Okay, so that wraps it up for foreign nationals. If anybody has any questions, please feel free to put any questions that you have in the chat, and be happy to answer any questions. Or if you have a borrower that you'd like to discuss with us, please feel free to reach out to either myself or one of our loan officers. Our 800 number here is on the screen. We have a tremendous amount of experience on foreign national loans. Okay, we have one question here. Can a foreign national do a 30-year fixed loan? Yes, there are many 30-year fixed loans available. And even the loans that are adjustable rate mortgages do not have balloons. They may be fixed for 3 years or 5 years and then become an adjustable rate mortgage, but they still have a 30-year amortization, and it's a 30-year loan. So they're all 30-year loans. We have another question here regarding escrows. Are borrowers required to escrow for taxes and insurance for foreign national loans? Most lenders do require foreign nationals to escrow. So it just depends on the program, but I would say about 80% of the time, if they're a true foreign national, they will have to escrow for taxes and insurance. And on top of that, most lenders are going to estimate the property taxes at a higher figure and not just go off of what the current property taxes are that, maybe they're from 1980 when a little old lady bought the house for $50,000. They're going to estimate future taxes based on either 2% or 1.5% of the sales price. So those are discussions that we can have. We have one other question here regarding can a foreign national do an FHA loan? I think we talked about that a little bit. It depends on the visa type, and it depends on the employment authorization document that they have. Actually, believe it or not, conventional loans are more lenient with foreign nationals than FHA loans. And we can, if the borrower does not own a house in their other country, we may be able to treat them as a first-time homebuyer in the event that they have all the visa requirements. They're here on a certain type of visa. And here's an interesting question about permanent resident aliens. So permanent resident aliens are definitely not foreign nationals, and they are also able to get all the normal loans like a citizen can get. But the permanent resident alien card cannot be expired. It has to be good for at least a year. There are a lot of people who are permanent resident aliens that haven't renewed their card or just not got around to it. So that's something that we have to watch. If somebody's a permanent resident alien, that a card cannot be expired. And as I'm sure everybody knows, immigration takes quite a long time to get certain things renewed. So that's an important thing for us to check in the beginning when you're working with a client. Okay, I think that's all of the questions for today. If anybody has any additional questions regarding foreign national loans, please reach out to either myself or one of our loan officers. And thank you so much for coming to this webinar. Sorry for all my coughing. And we hope that you will register for the next webinar, which we're going to be talking about homestead exemptions and how it affects the mortgage process. And we're actually going to be skipping next week for Thanksgiving. So please have a wonderful Thanksgiving, everybody. And we will see you in 2 weeks. And we will send you a copy of this webinar if you've registered. Have a great day. Bye, everyone.